Hello, hey guys, welcome to the AMA today. So today there's not really a predefined theme. We're just gonna be a weekly roundup. And is the sound okay? Yeah, yeah. So I'm gonna assume that the sound is fine. Yeah, so it's a pretty good week. I guess the market is finally kind of picking back up. We've seen ton of volumes on the CEXs and also kind of seen some boost in our VT trading volumes. And what we've been kind of working on pretty pretty busy right now. It's trying to open up more VT markets. We want to take advantage of the sort of these downturn and trying to open up more partnership and then launch more VT to T trading pairs. So the projects that we're kind of looking for are existing projects that are really there's no cap. Ranges from like top project like top 100 CMC tokens all the way down to like the 900 the thousands maybe like 10 million FDV or less. Because we've seen success in the PMF for all kinds of tokens that are locked. We've launched smaller tokens relatively, like Repo has ton of potential. That we've seen it grow like quite a bit, like 6x in 2 months, 3 months. And the VT served its unique purpose of unlocking liquidity and rewarding believers for holding VT. So there's purpose for that. And then for bigger projects like Aether, which had a really high FTV, I think close to a billion or over 1.5 billion at some point. Um, but it was mostly locked for the stakeholders, like node holders. So the LNT served this purpose of having the market for people to kind of turn over their assets and the vault serves its purpose of running the node and also just providing liquidity, having this market created where anyone can participate. So we wanted to open up more markets. We have these, like, I think 5, 6 vaults, and then let's try to grow it to 10. I think the overall token FDV hasn't changed, but in terms of dollar value, has been drawn down quite a bit just because all the token prices kind of falling down. So the recent sort of pickup of the market had us like increase a bit of TVL as well. So it's all natural, right? There's in that sense, because we don't really see much asset exodus from our side. Um, yeah, so it's all good. We're just wanting to open up more markets and have more because last year was I guess people can say it's a bull market. There were a ton of tokens launched, and typically it's a 3, 4 years, even 5 years vesting period for most projects. So there's so many projects that we wanted to work with on launching the VT. So one thing we're doing is, of course, trying to do business development, trying to reach them one by one. Another thing on the product side is we're trying to streamline this whole process for projects to launch vesting token trading, so that we don't have to talk to them one by one. They can just launch their own market as if they're using things like open up a Uniswap pair. So we want to build all this complexity of our VT into a simple protocol where projects they can just click a few buttons on our front end UI and get everything done. So wouldn't that be nice? So basically, for us, we've used what we've learned with our current vaults, and we generalize that into a set of smart contracts that are really more streamlined. I think there's mainly 3 parts. The team's going to share that once it's fully ready. So really for a project that that has token, uh, you can freely manage that. You can launch your own market. You can mint VT and then have people trading at liquidity and all that. So it's a little bit more complex than I would say like open up a Uniswap pair, because in the back end, the VT value needs to be one-to-one marked by the actual future vesting token. So there is like a sort of some predefined hurdles for the projects to launch the market. Like you have to be able to fulfill the vesting. So for that, we actually set it up in a way that so for projects who are like vetted by us, so we would actually have them more on the discoverable page on our soon to be updated protocol level website. So you'll be able to see like these are the project who we've at least like vetted manually. We know the team at least. We probably know or know their investors, and we know who's behind it. So then the VT that are minted are a little bit more trustworthy. And then we also going to have methods to enforce the VT to T conversion such that the wallet's going to receive the vesting token. And then there's also the projects who just mint VT on their own, like we don't necessarily have too much control over that. So naturally, the challenge would be for us, like once we open it up for everyone to use, we want to prevent bad actors, like people who are impersonating the project. That's even like bigger project impersonators saying that this is their VT. But I think we'll have a set of mechanism to prevent that. Of course, we'll have things like co-marketing, co-announcements with the future project partners, and also we're gonna fully vest them ourselves. I'd say like at least the first 10 or probably fully vest them. So in order to do that, the whole process is going to be through our front end and also via code submission on GitHub. So it's all pretty streamlined. Really, we think the bigger picture is essentially have LVT as the new way of issuing assets. So previously, projects issue assets being their token, and you have two kinds of tokens. You have the two groups. One is the market cap, the other it's the FDV. Between them, you have the tokens that are locked either in multi-sig with the wallets, or it's in a smart contract that is going to execute the vesting. You have the market cap, which is in circulation, and then you have the locked. So we think that can be improved. So we target the locked part of the token, which is the bigger part of the FDV, right? Typically, projects maybe launch at 20% in circulation, and 80% is actually locked. So what we're doing is we wanted to have those 80% also freely flow in DeFi. Now, of course, they're not going to be like fully convertible to actual tokens. That's not how it works. The actual vesting does not change. If it's vesting like every month for the next 5 years, it's still going to do that. It's just that we want those 80% tokens to be minted as VT. And for the stakeholder or for the project who wanted to have something to do with it, they have these fungible token to really do anything that possibly you can think of in DeFi, which is ERC20 and is composable. And we build this mechanism where you mint those VT, and then you also create a liquidity pool for the simplest thing, which is to price the VT against the native token T. Yes, I think that's a new way of issuing assets that really address the liquidity holistically, as opposed to creating a ton of like high FDV low float projects. Um, so yeah, so once we had this protocol, projects who issue their token, um, there's no reason to just like to not use it. Like um, you have your T that are trading in the DEXs or CXs, and you have the leftover minute that's VT. And those VTs gradually can be redeemed into T as you designed in your token release form, token release schedule. And we could make that enforceable via smart contract in the LVT suite of contracts. And now that you have it, you can do all kinds of things. For example, like projects can sell the VT for as a form of raising. There's a market for that, and then you sell it at a discount for people who are willing to hold it till maturity. And then another example, it's you can assign those VTs to your early investors that are going to realize those amount of VTs. And then by doing so, you don't have to manage the actual process of sending the investor the token. They could just come to the LVT vault and then claim the T when the time comes. And this is good for them because in the meantime they are holding VT and they can trade those VTs. They can send it to different wallets. It's really like a early unlock certificate for future tokens that it's freely tradable. Um, so that's why we think it's gonna sort of transform how asset issuance work. Um, because if like without this, like it's really we're having like 1.5 trillion total FDV in the market, but only like 1 trillion it's fully unlocked. So it's pretty high float. It's not really that solid. So plus those assets are just kind of sitting there doing nothing. So yeah, you can also design things like staking. You can let people who are entitled to these future VTs stake them um, and do governance. You can let VT to do governance so that which is actually quite useful because sometimes projects may want to have more tokens than they are in circulation to participate in their own governance. And this gives you a third party protocol level like trustless way of doing so. Because after all, like the LVT contract manages all that. So it's the same idea as a bridge, which is becomes a public goods nowadays. With LVT, the vesting token liquidity or ERC20, projects don't have to do it on their own. They can just use it probably for free. We have haven't really decided on the commercialization of it, but yeah, the idea is really just let people use it. So yeah, anyway, so that's what we're working on. We wanted to get more partners on board. We wanted to, of course, want to grow our TBL. We got up to 90 million. We wanted to get back to 100 million TBL, maybe even 200-300 million. So the near-term goal is trying to get up to 10 vaults, and then have some big partners joining our platform, and then at the same time trying to make it a public good by protocolize LVT, which is really another way of saying to make it permissionless, make it easy to generate. So yeah, that's that. And some questions regarding our current timeline. We've got people ask about zero G. So the problem with zero G is that they are a little bit hesitant on providing the initial liquidity because the team has become a little bit more risk averse on supporting any DeFi protocol. And then of course we don't have any nodes. I don't think there's a market for nodes yet, DOG nodes. So we're kind of stuck with that. But that being said, we've been talking with other eco protocols on projects on DOG like Zia, which is a DEX that is powered by AI. And we're pretty much ready to do something together on the VT2T trading. So it's really, I think it's really up to the DOG team, and I think there's no reason not to eventually pursue it. After all, it's a product that people really want to see because people do hold nodes, and there's still 2 years for the node to be fully vested. Other stuff, the Ether Technowall has been still pretty strong. It's seen like constant trading, moving around, and that's a pretty good PMF that we've discovered with Ether, and we've been through the life cycle of Ether, from the 1.5 trillion to now probably a lot less in FDV. But the trading, as far as the market goes, it serves its purpose. There's always people, trying to make use of this market, which is nice. So yeah, so really trying to grow our partner list, and then there's actually quite a few new partners that we're discussing right now. We've even seen some new node sales coming up, which is, I think, a little bit hesitant on that, but would love to see how the new node sales goes. After all, this market, in terms of the 4-year cycle, like we shouldn't have really anything meaningful in terms of a bull rally this year. But of course, it's also not a typical cycle top last year. Kind of ended abruptly for no apparent reasons, except for on the Binance sort of incident on the October 19th. So that's it's not a little bit atypical for a bull market. So we're still kind of reserved our opinion on whether this year is gonna have some huge upswing. So still a little bit, I guess, overall cautiously optimistic. Of course, with the wars and stuff. But now that there seems to be some sort of a pickup with the war being a slow burning reality. Of course, with some type of ceasefire going on as well. But I mean, for us, like I think DeFi, Web3, we're gonna find a way to find new narratives and keep pushing the industry forward. And then for us, again, kind of to summarize, what we're doing is we're trying to make vesting token issuance a thing for future assets. Like for future TGEs, projects don't just launch 20% in circulation. We want to make the 80% flows to be meaningful, so that the high FDV, low float become sort of something of the past. Yeah, that's our mission. We'll see how it goes with our vision. But I think it's pretty meaningful. Yeah, so I think that's pretty much it. Let me see if there's. I think we have one. Do we have any questions? Yeah, so we've been getting lots of impersonator accounts, and I think it's all pretty stupid to try to impersonate us because we are in the process of we don't really say this much, but we are in the process of exploring our TGE, our listing. So we're getting some targets on our back, which is fine, I guess. As long as people are diligent enough not to click any links that are clearly impersonating us. So we added some good measures, like every trade toward the end of the trade we have a picture saying that this is the end of the trade. But I mean, I think that this is not something we can fully prevent. Just like back when we were doing this in Discord, we're constantly battling the scam links. So yeah, on Twitter is the same. But I think you guys at this point are veterans of the industry. Yeah. Let's see, what else? A little bit more traveling for us. I guess this is an more in as much community focused, but like there's more traveling. We're gonna be in Hong Kong next week for the conference. Really lots of work behind the scene, trying to again open up more partnerships. And at the same time trying to meet some of you guys. Like sometimes it's always cool to meet some of the community members. I do find most of our members are in the US. That's when we get stopped the most at conferences, when they see our zoo t-shirts. But it'd be cool. It would be cool to see some of you guys in Hong Kong. Um, and Yeah, I think that's pretty much it, unless there's something anybody wanted to talk about. We do, yeah, again, we do think that again cautiously optimistic. Um, and the RTG doesn't wasn't like bounded by Bitcoin price, because it's I mean it's not just a 1 day thing. It's gonna be even with our vesting, it's gonna be years. I think we can't really time it that well. But we do want to get our token out there, especially with the upcoming updates by making VT a protocol. The DF token is going to play a pretty major role in terms of things like governance, like who gets to be open up the LVT vault and then be able to sort of be discoverable on our side and things like that. And then also like profit sharing, like who's gonna like of course if we're gonna have commercialization, which protocol is gonna get the most profit sharing, like they get DF token emission, and how the protocol is gonna spend the earnings in the VTs, like the actual partners tokens. Like that's because like if you look at our revenue projections, it's all in these Ether token, Repo token, and Filecoin, Story, IP. So it's all these different coins, different tokens, and how we spend that. That could be meaningful for token holders. Of course, the token's value kind of was driven by the what's behind the protocol, like the future value of the protocol, the actual revenue of the protocol, things like that. So I think that's a positive cycle. Like we get our token out there, and the better we do as a protocol, the higher should the price of the token be, if that makes sense. So, and then for the team, that's also, I would say like it's a really nice positive cycle. The team's gonna eventually be rewarded by tokens, and they would need to do a good job to like build the protocol even better and bigger, higher TBL, higher revenue, and then they would eventually earn more. So it all makes sense. That's how, at least that's how I think most DeFi protocols are structured if they're done right. Um, we are a little bit more innovative. But at this point, we haven't posted anything, but it's all going to be kind of preview. But we have a unique voting mechanism called governance node, which I probably don't want to go spend too much time today. We're already doing more than 20 minutes. But it's really just like token holders don't have to vote on everything. You just delegate it to a node holder, governance node holder, and they would do the voting for you. And then you can see the track record of their performance. And then, yeah, so sort of like a delegation model, like a staking, and then you earn in return of your based on the decisions. Yeah, so yeah, because not everyone's gonna want to vote, but people could easily stake. Um, anyway, that's something I think once we have the token, it'd be pretty cool to implement. I think that's pretty much it. That's all gonna be all for today. Every Thursday. And Yeah, hopefully, thank you for staying with us. Hopefully, you had learned more updates. Being keep updated on our progress. Yeah, hopefully, we have more to share soon. Yeah, thank you. That's all. See you guys.